Good afternoon, everybody, and welcome back to the Fintech Nexus weekly news show. My name is Peter Renton, chairman and co-founder of Fintech Nexus, joined as always by my good friend and colleague, Todd Anderson. How are you doing today, Todd?
I'm well, Peter. Getting set for a long weekend.
That's right. It is coming up. Looking forward to some summer activities. And
Yes, indeed.
joining us, staying up late from her home office in Paris, we have Isabel Castro. How are you doing, Izzy?
I'm good, thank you. Good to be on here again.
Good to have you again. All
Good
right,
to have you back.
let's get into it. We've got lots of stories to cover today. We're going to lead it off with Anne Bowden. She is the founder and CEO of Starling Bank, and Starling has been around for almost a decade. She has led that bank for the entire time of its existence, and she has decided to call it a day on the CEO role. This is a big deal because Starling Bank is really one of the most successful, if not the most successful, digital bank in the UK, and they are profitable. They're growing. They just reported their revenue for the year ending March 31st, where they did another fantastic job. Well, probably they may be the most successful when it comes to profits of all of the fintech companies in the UK. So, anyway, I think this is an end of an era. What are your thoughts? What are your thoughts, Izzy?
Yeah, I mean, you took the words out of my mouth. It is an end of the era. Like, Starling is one of the original neobanks in the UK, and Anne Bowden has always been this figurehead, larger than life. And it kind of like, because it coincides kind of with their profitability announcement, it's kind of like she drove it to this point, and now she's like, look, mic drop. I am out.
Right. No, she's leaving. It's not leaving it on any kind of low. It's sort of all-time high. With all of their numbers were basically all-time highs. So, Todd, I know if you can keep your kids quiet in the background, that was you, I presume.
I think they benefited from a few different things. One is they had one big investor that was supportive of them for a very long time, which I think gave them early flexibility to get to the point of profitability. Because I think if they had the normal cap table that many others have, I think they would have maybe struggled with some of their early moves. But they had a dedicated, big time investor that I think helped them, and certainly was a pioneer in her right. I think the most interesting part of this story is I didn't realize they almost tried to scoop her right out of there last year with like the CTO. So, I think she goes out on a high note. I think she's probably the most successful digital bank founder / CEO when it comes to profitability in all the world, because I don't think we have that much insight into Revolut and really where they are.
Right.
And so I think we have better understanding as to how profitable Starling is compared to others, and she should be commended for the job she did.
Yep. She's stuck to her knitting, and she's really focused on one market. They were in the process of trying to expand to Ireland, and that looks like it's on hold now. And she's really just focused on the UK market. She has a big small business operation, and the proof is in the pudding, right? The numbers speak for themselves, and I mean it was pretty amazing. I think it was $195 million in profit last year. That's 100 million, pounds in profit. That's up 6 times from the previous year. So doing really well.
How many fintechs would like to have that?
Oh God, I mean, for sure, that would be. I don't know if there's many anywhere outside of maybe China that can come anywhere close to that. Okay, we're going to move back stateside here and talk about JP Morgan, because they had an investor day this week, and JP Morgan continuing to go from strength to strength. They did announce at their investor day that due to their acquisition of First Republic, they're actually going to make more money than they expected this year, and they've done very well. Obviously, out of the pandemic, out of the banking crisis, 600,000 bank accounts opened January to April. That's ahead of what they did last year. Not as many as I actually assumed when considering all of the flight to quality that happened after the Silicon Valley Bank blow up. But doing really well. Todd, the Chase continues to be just the standard setter in all of banking, wouldn't you say?
They are the gold standard. Jamie Dimon is the gold standard. It feels as if JP Morgan does very little wrong. Even if they do things wrong, it tends to work out for them.
Right.
In the end, if they make some missteps, they tend to figure it out. Or their missteps are just kind of minor compared to how big their balance sheet and their business is. I think the number of accounts was a little bit lighter than I would have thought as well. But Jamie Dimon, as we call him, the super Fed, is the probably best banker that we've ever seen and probably will see for a very long time. And my only reticence with anything that JP Morgan has done is just they've acquired so much power that if there's any hint of real issues within JP Morgan, it is just going to be a huge, huge problem.
Yep.
And so while they continue to be the bank to strive for, I do worry over time is like how much power do they really have? And is it too much for an organization?
Yeah, and Jamie Dimon is not going to live forever, unfortunately. So they're going to have to hand the reins over. He's been around there for.
I feel bad for who comes after him because it's like who comes after a big sport athlete. Like you can't replace him.
Yeah.
So it's like whoever the second person is that comes after the first person is really the one who will probably live. Who will probably take it to the next phase. The next person, I think is like a lose-lose situation.
Right, indeed. Izzy?
Yeah, I mean, some people that I've talked to, like through the interviews that I've been doing, they're concerned that JP Morgan are taking such a big role. Others think it's fine, particularly for fintechs that can kind of like partner with them and leverage the fact that they are too big to fail. I mean, there's this general census that if anything were to happen, they would be helped quite significantly.
Mm-hmm.
So, I mean, who's to say, what does this mean for the smaller banks as well? Will fintechs kind of partner with a big bank like JP Morgan and then kind of overtake regional banking and smaller banks? We'll see, I guess. It'll be interesting to see how this pans out.
Yeah, interesting that the JP Morgan haven't really got much of a banking as a service business. They don't really. It's just not what they focused on. So I don't. I think there's still room for these smaller banks when it comes to serving fintechs. But
I do think the longer term question is like, what is the role of the mid-sized regional, or I know there's a role for the small community bank that serves like one community because that's their lifeline into the financial system. But there's many that kind of sit in the middle. And what is their ultimate role if the JPMs acquire so much power or the fintechs begin to acquire customers at higher rates? Like, do they just get absorbed and disappear? Like, banking in 25 years could look so much different for where it is today.
Yeah, I think that's for sure. It's going to. Okay, moving on. I want to talk about venture capital now because we had our friends at QED Investors announced this week that they have closed 2 new funds, a $650 million early stage fund and then a $275 million early growth stage fund. I'm not sure exactly what the difference is between early growth stage and early stage, but regardless, $925 million for fintech, basically dry powder for fintech companies. Clearly, they have not been doing a whole lot of investing lately, but this is like, when you talk, I saw in the article in Bloomberg, Nigel Morris, one of the co-founders there, said that he thinks we are past the nadir of fintech valuations. They have bottomed out and we are going to be coming back. So clearly they're ready to start investing. What are your thoughts, Todd?
I mean, that's when I saw this, the first thing I thought of is like, are we about to get back on the roller coaster on the upside? I hope so. Obviously they won't be as crazy as we saw a couple
Yeah.
of years ago, but I think this is a good sign for where the market could be heading in the next 18 months. And if we talk about gold standards of fintech investing, I mean, I don't think it gets better than QED and Nigel and Frank and those that are, running QED. They are, without a doubt, some of the best investors. And they're also some of the more reasonable, like, outlook investors. You rarely see them make these like crazy bets. They tend to be very much within their thesis, and they don't go way outside and take these crazy chances. And so I think this is a good sign. Obviously, we'll wait and see what happens the next 12 to 18 months, but I think it's a good signal.
Yeah. Yeah.
I think so too. And I mean, in the article, I think they were quoted as saying that they see it as a great responsibility and they would be vying away from growth at all costs, which is great. I mean, they know what they need to do with these funds. And I like the fact that they're focused on early stage and early growth stage. I mean, looking at kind of the investment landscape at the moment, that seed seems to be getting a lot of action. It's good to have some kind of growth dry powder happening right now.
Right. And they've always been like a Series A, Series B type investor. I mean, some seed stuff, but that's where they've sort of made their name. And they are. I mean, the reality is they're one of the most successful investors we have, and we're lucky as an industry to have a company like that, where with such deep knowledge and deep history. I mean, they started in 2007. It's been quite.
Oh, and they have that banking background too.
Yeah,
with the Capital One.
Capital One, exactly. Anyway, moving on. We heard this week, Fifth Third Bank has acquired the embedded payments company Rise Money. This is they provide a payments API, handle ACH, wire, real-time payments, that sort of thing. And this is an area that Fifth Third doesn't really play in, hasn't played in. Now, we don't know the terms of the deal; they were not disclosed, so it's left to our imagination to know whether this was actually a distress sale or one that was really a great outcome for all parties. So we don't know, but Fifth Third, top 10 bank, getting in the M&A fintech game.
They tend to be one that's a bit on the quieter side of things when it comes to at least announcements and some of their either partnerships or acquisitions. So maybe this is Fifth Third turning a corner a little bit and kind of jumping into the game a bit more. But the signal of terms were not disclosed tends to at least give the impression that maybe it wasn't great for all parties, especially on the Rise side. But I think you're going to continue to see more moves like this by banks of all sizes as fintechs can't get funded and want to do maybe those acqui-hires and bring their technology into some banks. So I think this is something that we're going to continue to see over the next at least next 6 to 8, maybe even 12 months.
I think the thing that jumped out for me really was the interesting timing of the announcement, because I mean, July is coming up. We've got FedNow happening. Rise focuses on real-time payments. Are they kind of preparing themselves to get ready for this new infrastructure?
That's a good point.
Or at least make themselves more competitive. I mean, it's not unsurprising that they're going this way because everyone wants faster payments nowadays. But this is the thing that jumped out to me the most in this announcement.
Well, clearly, I said the world's going to real-time payments in some fashion, and it's probably good to beef up your expertise in that area, and that's what Fifth Third has just done. Okay, moving on. Wanted to talk about an article in American Banker talking about this $8 credit card late fee plan from the CFPB. and this was announced, I think, back in February or something. But the American banker did this piece on this week saying that the CFPB has received 58,000 comments on this proposal just to cap credit card late fees at $8. This has nothing to do with overdraft. This is just credit card late fees. And you've got banks and credit union groups threatening to sue. It's really it's a bit of a shit show in some ways. That that this, there's just so many people, there's so many different kind of arguments here, whether it was rushed out and not well thought out. I like, my perspective is, I think it's certainly good for consumers. I don't like banks making lots of revenue on fees. I think they should earn it in other ways. But Todd, what are your thoughts?
Well, clearly there's been a concerted effort to try to bring down the fees that banks and financial institutions charge. This is along those lines. It's obviously specific to credit cards, but I'm more curious, like, who are the banks that say, hey, there's an opportunity here to acquire customers and maybe change how we interact with customers, a subscription or some other model that eventually the fees, just like fees in interchange and everything, like, fees are always coming down. Very rarely are fees going up and up and up. Mm-hmm. So who's going to be the leading bank that says, hey, you know what, let's get rid of some of these fees. We'll just charge $5 a month. And you get X amount of leeway or X amount of benefits for that. To me, it's going to be interesting to see kind of how the business model begins to evolve as fees continue to get compressed or pressured to be eliminated by either regulators or legislators.
Mm-hmm.
Yeah, it's definitely going to be interesting to see the innovation that comes out of this. Multiple responses to the idea were proclaiming that such a reduced amount will surpass the associated costs. I don't know whether that's them trying to justify.
Yeah.
But if that's the case, you can understand why there's outrage. But if they go through a subscription model, maybe they'll be able to kind of turn it in their favor. Who knows?
Yeah, I think that's the thing that Todd was just saying. I feel like that, I would like to see banks start to look at new ways of making money and actually providing value. This is not providing value when you have a late fee on your credit card. So
every time I hear of fees, I think of the podcast you did with, it was Aaron Klein.
Yeah. Yep.
Every time I think of fees, I think of that podcast and how many smaller banks, their entire profit margin is fees.
Right.
It's astonishing how much some banks rely on it. And, those are going to be compressed over time. And they're either going to get acquired or have to change or they're not going to make money anymore. So It's fascinating to see what's going to happen to those banks.
Yep.
I know that some of the responses said that it kind of trivialized the fees, and I guess that it gives less incentive for people to be kind of timely with their payments. I don't know. Again, I don't know how much that is true.
Clearly people are probably going to think, oh my God, I can't make this credit card payment. $8 isn't as bad as $35. So it's possible. But anyway,
most people pay their bills because they have the money, and they don't because they don't have the money.
Right. Exactly. Anyway, moving on. I want to talk about Venmo. They were in the news this week. They are joining the growing number of fintech companies that are offering accounts targeted towards minors. In this case, specifically teenagers, 13 to 17 years old. They basically, it's a pretty basic account with, it's a no-fee debit card. You got ATM access. You'll be able to, the parents will be able to see exactly what their child is doing when it comes to transactions, what their account balance is, who are they transacting with. It's rolling out next month. I think this is, Venmo is really popular with a lot of people, and clearly, I think having 2 teenagers myself, I think every teenager should have their own card that is obviously supervised by parents, so they can help learn, some of the basics of financial management. So I think, another good move. What are your thoughts, Todd?
I mean, it feels like a natural move, but I mean, those people that use Venmo tend to skew on the younger side, and as people kind of age up towards, being teenagers and even get ready to graduate, having an account that's associated with Venmo and how they kind of split payments with their friends and stuff, to me is just natural. And the earlier we can get people using financial services, I think the better, because they ultimately will figure things out earlier. So natural move.
Yeah, I mean, it's not a super new idea, and loads of people have had success with it. So exactly, it's a natural move. It's going to be good for financial education and possibly the financial health angle, but really, it's like a digital version of getting pocket money in cash and just doing it that way. But now people can kind of track what their kids are having.
Yeah, well, that's what we do with our kids. I mean, actually, my son now has income coming in, so he stopped his allowance some time ago. But my daughter has, we call it allowance in this country, Izzy, has an allowance coming in, and it happens automatically, first of the month. Just she gets her allowance, and she knows she has to manage that money until her next payday, which is in a month's time. And it's good to have that education, like, oh, I can't afford to go to Starbucks today because I have 35 cents left in my account. And so I think that's a good education to have. Anyway, moving on, Airbnb and Klarna in the news. Basically, this is a pretty simple story. It's just Airbnb have partnered with Klarna to do Klarna's standard, the standard buy now, pay later, 4 installments over 6 weeks type deal for the US and Canada users. I think this is going to be a winner for both companies. I think, because people love to travel, and sometimes that upfront hit is pretty hefty when you're booking a place on Airbnb.
I think it's going to allow more people to travel. Because a lot of people don't. I mean, they'll put it on a credit card if they really want to travel, but a lot of people are like, you know what? It never feels like I could pay down my credit card.
Mm-hmm.
This way, it gives them the option to do a vacation or a book travel, and it doesn't feel that daunting. So I think this will be helpful to those that want to travel and maybe find the credit card or the upfront payment a bit of a burden, and gives them more options.
Personally, I'm super excited about this one. I'm really excited. But the one thing that holds me back from being completely 100% excited is the question whether this will encourage more people to go on holidays that they can't necessarily afford.
Right.
I mean, the accommodation is one thing, but then you go on the holiday and then you've got all the other stuff, and then is this going to mean that people go on these holidays? They can't really afford it, but they'll go anyway, and then it will get into a kind of cycle.
They're doing that already with credit cards.
Yeah, they are.
To be honest, I mean, this gives them a little bit of a safer option versus using the credit card.
Yeah.
Maybe. Yeah.
Yeah. Okay, moving on. We're gonna we got a couple of companies that have called it a day this week. We heard Daylight. That was the LGBTQ focused digital bank that did pretty well. I know you had them on your podcast, Todd. They received $20 million in funding. It was always going to be I felt like a hard thing to scale profitably, and it's proven to be too difficult for them. And then Plastic, which surprised me because they tried to do a SPAC back in 2021. Plastic have filed for Chapter 11.
Craze.
Yeah, Chapter 11 bankruptcy, and they're not just shutting down. Their assets are going to be acquired by a company called Priority Technology, which I don't really know well at all. So two more bite the dust.
Yeah.
I mean, it shows you that going after niches, it's hard.
Yeah.
And especially to monetize them, because eventually you do have to make money. You can't just raise money forever. And so figuring out, all right, here's the niche, whether it's, daylight with, LGBTQ, or, I think there's ones that focus on musicians, and others that focus on other segments of the audience. It's so hard to then say, hey, here's a cool product, here's a free this, we'll make interchange. But then as we continue to grow, how can we offer them diversified products so we can make money? And it's not easy. That's why Chime is, considered doing well, even though they don't fully make money, but they have like 15 million people.
Yeah.
It's hard.
It is.
Yeah, I mean, challenging times. So the wider you can cast your net for your clients, and stuff like that, the better. No?
Yeah. But it's still, I mean, these niche neobanks, I think they're not going to be the last one to go.
Daylight also had some other internal issues.
They had some other issues. There was a lawsuit flying back.
Yeah.
I think so. Anyway, we're going to close this week with on the crypto space. We haven't talked about. I think we've even said the word crypto all news show. We're going to talk about Binance, because there was a investigative report from Reuters who claimed multiple sources telling them that Binance commingled customer and company funds in 2020 and 2021. That is a big no-no. That's what FTX did. Sam Bankman-Fried may well be going to jail for a long time. And Binance, we always wondered, it's been so opaque in there. And they had Binance.us, which was sort of their US arm, but then they officially weren't available to US investors for a while, but then people were getting around it. And anyway, Reuters have really done some work here, and they've got actual copies of transaction statements and different records, and they've gone out with 3 different sources. It looks like this may be true, and if it is true, that just is another black eye on the crypto space.
Yeah, I mean, Binance, in the wake of kind of everything that happened with FTX, CZ decided to kind of rise as this new savior of the crypto industry, talk about transparency, talking about how great Binance is and how different it is. It really isn't. This story, before I read the story, I saw the reaction from their chief of communication, and it was just so over the top. He was calling Reuters desperate. They were prejudiced because they said that CZ was born in China, but didn't say that he was Canadian. Like all of this kind of defensive action.
But didn't actually take on the allegations directly.
No.
That tells us everything we need to know. If they're deflecting and not saying, hey, this is not true, this incident of whatever you found is not true, we've never commingled funds, there's a reason why Binance continues to be opaque, because they don't want people to know. They're probably making boatloads of money being opaque as well. Peter, I think your comment at the end when you teed up the story is, I think the crypto community itself really needs to start figuring out, like, the Binances and FTX of the world are not going to help you get adoption at all.
Right.
And eventually there is a part of the community that is my keys, my crypto, and they're hardcore. But the vast majority of people probably want some level of interaction with the traditional financial system. They just want it to be faster. They want it to be cheaper. They want it to be a bit more private. And the more stories like this, the less likely that is ever going to happen. Yeah. And so, we still need to flush some of this out of the system. And, I think Binance is part of the problem, not the solution.
Yep. Yeah. I feel like that's the whole, as you say, it's just been opaque, and it's been, we don't know. And this was 2020 and 2021. Maybe now they are completely above board and everything's totally fine. It's always possible. After the FTX blow up, maybe they really felt like they needed to get their act together. But regardless, as you say, crypto has so much potential, and it just keeps giving itself black eyes, self-inflicted wounds that are just basic financial management that they haven't done. And I think it's a real shame, because I think the technology is fantastic. I think the whole idea of having this alternative money is fantastic, but when run by a bunch of cowboys, it's not going to work. It's just not going to work.
Nope.
Anyway, we are out of time. Izzy, thank you so much for joining us today. Great to have you on. Appreciate you staying up late. Todd, always great to see you. Thank you, of course, to the listeners and the audience. We will be back same time next week. Until then, have a great long weekend, everybody. See ya.
See ya.
Bye.